Where are my bulls at? Markets are at all-time highs. If you stayed long, congrats to you, because that's what stocks do. And you know what's going up? Dividend stocks. A lot of people are like, oh, I want growth. I want growth. Sometimes having dividend stocks is a great way to outperform. And this year, dividend stocks have been on fire. And I can't wait to get into this because we have 5 amazing dividend stocks for September 2021. Hey, I am Luke Downey. I'm co-founder of MAPsignals. We don't follow the news. We follow the big money because we have learned that some of the best companies out there, the outliers, they continue to attract some of the biggest and smartest investors out there. So we use that as a tool in our process. But at the end of the day, we just want to make you a better investor, and looking at data can really help you do that. So before we get into it, make sure to like and subscribe to our YouTube channel because we are trying to grow this thing as big as possible. We just started doing videos earlier this year. We're having a lot of fun and a lot of feedback has been very positive. And for that, we want to keep going that direction and making people happy. So make sure to smash that like button and let's get big, baby. All right. With that out of the way, we need to go ahead and look at some of the data, right? That's what we do as a firm. Not only do we find great stocks, but we also want to look at the data. And I want to showcase exactly what's happening because something interesting just happened. So what we have here is our big money index. And this is super simple, right? It's just an index that tracks the big money. So if the index is heading lower, that means that big money is coming out of stocks. Usually markets fall. And when big money is going into stocks, right? When people are buying stocks, usually the markets head higher, right? You can see that for the most part with the SPY ETF. But heading into the summer, things tend to get super volatile, and we saw a lot of selling happening with stocks. And a lot of that was in small caps. And so we've kind of been like defensive and, expecting markets to pull back. And they did, small caps did, they pulled back relatively hard. But we are starting to see that the big money index is starting to ramp. And in fact, it has actually gone up 5% the last 2 days. And I expect this thing to head higher in the coming days. And so for that, that is very near term bullish. And then if we go ahead and we just look at ETFs, and this is super cool because if you study ETFs, you can actually start to see some cool market insights. And so what you're looking at here are big ETF buys and big ETF sells. So if you see a lot of buying in blue, we tend to be at near-term peaks. Markets tend to pull back, right? When everybody's high-fiving, usually it's not the time to be buying, right? But also on the flip side, when you see these big, nasty red sell days, right? Usually that is near the market lows and the markets tend to bounce shortly after. So we have seen that the last 2 times that we had any pullback, and the last one was on last Thursday, you see big ETF selling, and that is an up and away signal. And so that is what's so cool about using data because, it can really give you some insight. So if you're the type of investor who likes to buy on pullbacks, whenever you're using data like this, you can really get some cool insights, and it might actually help you along the way. So that's what's so important about the data. I'm going to put a link into the description here. Make sure to click that if you're interested in some free insights. You can go to our blog. We love talking about cool market data. But now it's time to get into stocks. So let's go into the number 1 stock for September. And it is none other than Lowe's, right? Lowe's companies. I'm sure everybody that is watching this, they are familiar with Lowe's, right? They are just a big home improvements chain. You go in there, you want to buy something for your house, an appliance, you want to fix something, you go to Lowe's, right? And what we're looking at here are all the big money signals the past year for Lowe's, right? So if you see a green signal like this, that means that the stock was going up with some big money buying. If you see red signals, it means stock was going down with big money selling. What has happened recently is before earnings, someone sold this thing. And then the earnings came out and then just shattered expectations, raised guidance, right? And the stock just went up and away. And so that's what makes this a great stock. And also, the dividend has been very solid. But don't just look at 1 year, I like to look multi-year. So I go all the way back to 2015. And while this was a little noisy looking at the buys and sells, if you look at it over the long term, is this a quality stock? And that's what this blue signal is all about. So it's basically saying, hey, did this stock see some big money buying? Yep. Is it a fundamentally sound stock? And if you start to see a lot of these blue signals, right, that's rare, that means that this is a high quality stock based on our process, right? So now you see a stock, got a growing dividend, seeing the big money love. What do you do next? Well, you want to look under the hood, right? Because you can't just look at big money alone. You got to look under the hood. And that's what we're going to be looking at here as we go through. So again, on the left side, it's kind of like your technical action indicator chart, right? Your big money signals. And then the blue, that's the stairway to heaven, right? The more blue, that means like this is a highly ranked stock. Okay. Want to see a lot of blue. There's going to be a lot more blue as we get further, but let's talk about Lowe's real quick. It's a discretionary name. Share price is $203. Market cap's 142 billion. And in 1 month, this thing has gone up 2.6%. Year to date, it's up 30%. You look at that big money stuff, right? You got 4 sell signals year to date, and then you got 8 buys, right? So when you see more buys, that tends to be more bullish, right? The last time they raised their dividend was up 33%, right? So who wants a 33% raise? I do. You look at their 3-year dividend growth rate, it's just up over 13%. I mean, just cranking away. We're in a low yield environment, so a 1.57% forward yield is actually kind of nice, especially with a company that's growing like this. And then their 3-year earnings growth is just under 35%. And why is that important? It's because it's one thing to talk about dividends, what companies pay, but it's also more important, at least to my process, is like who's going to be able to raise their dividend over years. It's most likely going to be the ones that have great earnings growth, and Lowe's has that. I think their dividends going up for multi-years from now. And so for that, it makes the #1 stock. So bada bing, bada boom. What we got to do next? We got to move to number 2. And again, as we go through this, I want you guys to just start understanding it's more about the process than it is the actual stocks, right? Everybody here, they have their own process. This is just ours, but we find some juicy ones, right? So the number 2 stock is Microsoft. And in full disclosure, I own this name in personal and managed accounts. I've owned it for years. Love this name. They're a big software player, right? If you're got a computer, you definitely are familiar with Microsoft. If you're a gamer, you're definitely familiar with Microsoft. If you've got a database, and it's on the cloud, you probably know something about Microsoft. They're just in everywhere, right? And you look at a year like 2021, where has a lot of that big money buying been going? It's been into some of these quality stocks, and Microsoft is one of those. And I mean, look at this. I mean, you want to talk about stairway to heaven. Microsoft has it, just a lot of juice. And then you go back to 2015, look at all these blue signals. I mean, the more blue, the more juice. That means generally the stock is somewhere to be, and it's not down. And I know it's like, oh, it's Microsoft. Where's it going to go? I remember when I bought this thing, it had, I think, a $500 billion market cap. This thing has gone up like many folds since then. So it's like, sometimes, it being a big stock doesn't necessarily mean that it's not going somewhere. You know what I mean? So big stocks can be good stocks. So in this case, Microsoft. It's a technology stock, right? Share price, unbelievable. This thing is at $304. Market cap is $2.3 trillion. Huge, huge, huge company. It's up 5% year in 1 month. Year to date, it's up 38%. You look at how many buy signals it's had year to date, 18 of those bad boys. Did they raise their dividend? Yep. It was about a 10% raise the last time they raised it. The 3-year dividend growth rate is 10%, right at 10%. The forward yield, I know a lot of people are like, wait, this is not any yield. Look, there's a lot of growth that comes with Microsoft, right? And I'm happy with that, okay? But more importantly, can they probably raise their dividend? Yes. Why? Because they've got 3-year earnings growth of like 63% on a 3-year basis. That is just insane for a company of this size. And so that's why it's so important to really look under the hood, because there's a lot of stocks that pay a dividend, but who are the quality companies, right? And so that's why you really got to do your homework. And Microsoft really checks the boxes for me in a number of ways. Let's get into number 3, and that is ResMed, ticker RMD. This is also another name that I own in personal and managed accounts. I have loved this name for a number of years. Basically, nobody really talks about this company. It's a healthcare company, medical devices. They do masks. They've definitely benefited with this COVID environment. And you can see that with all of the recent big money buying that's been happening with the stock. You see it right here. Now, there was that growth scare that happened earlier this year, and the headlines were scary and freaking everybody out. And people sold ResMed. But look at this thing. It's coming back in style. You go back all the way to 2015. You see a little bit of blue back in the day, and there hasn't been one in a while. I think there's going to be some in the future. But even if you go back years, right, you got to think long term, right? A lot of blue, a lot of stairway to heaven. The more blue, that's what attracted me to this stock, and that's why I like this name. But again, you really need to look under the surface. You got to look at the fundamentals, because it's, there's a lot of stocks that go up, but very few stocks are going to have the fundamental characteristics of a juicy growth name. And so ResMed, healthcare stock, share price $286, market cap, it's not that big, $42 billion. In 1 month, the stock is up 10%. Year to date, 35% gains is awesome. Year to date, we could look at the big money buys. Right here, they had 6 sells, right? And then they had 8 buys. So this thing has been ramping. As markets go higher, there's a lot of healthcare names that are zooming, ResMed being one of them. Last time they raised their dividend was a 7.7% raise. And there was a couple of years where they didn't raise their dividends. So they just started raising it again. I think that is very bullish for the name. 3-year dividend growth rate, I get it's only 4.3% growth, but this is a great name that has been going higher for many, many years. It's a great performing stock. Forward yield is small. So if you're looking for big yields, this one isn't going to fit that bucket. We got a couple more that have bigger yields in a second. But the 3-year earnings growth rate on this one is just about 19%. And that is what you want to see, man. You want to see a lot of positives. Check the boxes. You're doing your homework. What stock am I going to buy? Which one am I going to like? You need to be looking at not only technicals, but also fundamentals and some big money. Big money helps. So that was the number 3. Let's go ahead and look at number 4. This one I have talked about before. They just had a great announcement. We're going to go over that now. And that is Extra Space Storage. REITs have been on fire, right? We're in a low yield environment. What's getting scooped up? Stocks with big, fat yields. And look at this. Not one red signal over 1 year. That is a tremendous bullish sign. This thing has a lot of momentum. You look at it since 2012. Lots of blue signals. Also, full disclosure, I own this one in personal and managed accounts. Feel like I need to say that. The more blue, the better I think the stock is, the higher the quality. And we need to go ahead and just look under the hood on this bad boy. And you're going to start to see what really attracted me to this stock years ago, why I like this name, why it's setting up, right? Because there's a lot of real estate names out there, but very few have the seeds of greatness. So again, share price $176, market cap just about 24 billion. In 1 month, it's up 3.5%. Year to date, a smoking 55% gain. 19 big money buys, right? Real estate has been so hot year to date, including this stock. They just raised their dividend. I think last night they raised it. They were paying $1 per quarter. Now they're paying $1.25 per quarter. I mean, that is a 25% raise. I will take that all day long. And you look at their 3-year dividend growth rates at 13.2%. That is smoking. The forward yield, hey, if you're looking for yield, this thing is 2.83%. It's a little bit of juice. Earnings growth is basically right around 0, and that's totally fine because it's a real estate company. A lot of times it's not about growth. It's about just getting that dividend payout out the door. And that is what this one is doing. Extra Space Storage has been a great name for me. And, if you're trying to build your dividend portfolio, I do believe you want to have some real estate in there. So that's one to consider. Now, let's go ahead and get into the number 5 stock. And this is going to have the biggest yield, and that is AbbVie. Okay, AbbVie is just a great name. Full disclosure, I own this one in personal and managed accounts. I like this name a whole lot. It's a healthcare company, pharmaceutical, drug manufacturer, the whole nine. You can see a lot of green year to date. Healthcare has been so hot. Last year, it was not. This year, it is. So just keep that in mind. Like, these things flip from hot to not, all that, right? And then we could look at all of these blue signals. Like, how many times was this thing a big money favorite stock? You see a lot that happened in 2017, 2018. There was one lone sell signal. I'm not too worried about that. When it's just one time, a lot of people are trying to figure out, what do we do with AbbVie? Look, this thing's got somewhere to be, and it is straight juice. And if we look under the hood, I think you would agree there is something about this name that is highly attractive. And so real quick, healthcare name, share price $119, market cap $211 billion. In 1 month, it's up 1%. Year to date, it's up 15%. Are they buying it year to date? 7 big money buys. The last time they raised their dividend was a 10% raise. I'll take it. Hallelujah. The 3-year dividend growth rate, just over 22%. Cha-ching, cha-ching. The forward yield is 4.37%. You really can't find big yields like that. There's just a little worry about, with some of their drugs and patents rolling off and all that type of stuff. But I think this company is going to do well over the long term. Their 3-year earnings growth has nothing exciting, just 2%. But this is how you go and take a full approach whenever you're looking for dividend stocks, right? And I know a lot of people are like, oh, I like growth. What about dividends? Blah, blah, blah. Look, sometimes you want to have dividends in your Corp, because whenever growth goes out of favor, sometimes the love goes to dividend stocks. And that's what we're seeing right now. So remember, at all times, think long-term. Don't get spooked out of your great stocks, because they continue to go up higher and higher over the long term. The number one rule, if you're a long-term investor, is hold. With that, I'll see you next time.